right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. Hey, we got a comment from Derek, which is Jethro, by the way. He's Jethro in our chat room. He's a guy that I had a drink with. The gentleman I had a drink with the other night. Well, actually, about 2 weeks ago when he was on vacation. Him and his son and actually a whole family came down to Phoenix to get a part for his truck while he was on vacation, and got an opportunity to have a drink with him. And he said, "Hey, great calls yesterday on the Aussie New Zealand, Euro New Zealand, and U.S. dollar Canadian." Awesome, Derek. Great to hear from you, and hope all is well. And glad you made it home safely from your vacation. It was definitely nice meeting you and your son and your family and the rest of your family that I met briefly before you left. So now we're going to get into our analysis this morning, and we're going to start with the euro first and foremost. Now, there was somebody who sent this to me yesterday. Now, I should be short the euro based on this analysis, but I mean, first of all, I should be short the euro. I'm not right now. I should be, but I'm not. So if you're short the euro dollar right now, I want you to understand that I feel that I should actually be short the euro. I just happen not to be at this moment in time. But I want to show you a couple things. Okay, so first of all, if you look at what we've done here with the euro, okay, let's go ahead and remove this, and let's remove this. Okay, so there's something that I think in particular that I wasn't even looking at yesterday, and I can't remember who sent this to me yesterday, but whoever did, thank you very much. If you take this move from the low, spike low, to the high, okay, this is Brexit move, right? Is that the Brexit move? Yeah, that's a Brexit move. Okay. You guys see that? Here, let's get rid of this. Okay. So, and let me remove. Well, I can leave that. Let's. I'm going to move this over like that. Move this over like that. And then let me do this because I should tweet this because it is important. I don't know who, again, I don't know who sent this to me. There's A, B, C, D. Okay. And then on top of it, and I'm going to throw this in here, but you can I might remove it. Depends on how messy it looks on the chart. Okay, now we can actually tweet this whole thing. So just bear with me. Let's see. Today is the 3rd. I can't believe it's the 3rd already. Summer's almost over. My kids go back to school next week, which is phenomenal. Here is how I see the euro on the Morning Edge webinar right now. Hint. Hint, it's a short. Okay, there you go. There you go. I just tweeted that out, but and I tagged Nick Trades in that because she's big on the ABCD look, but you can see we hit the almost 127% extension of the entire move here, of the entire move lower. We if you do it from over here, you are just shy of or just surpassed 127% extension. What will really get me interested on a short is if we break back below this 111.80 something or other. Okay, um, that's what will signal to me that it's really time to be on the short side of the euro, and then you can short it with stops above the highs, and that's going to be following the data today. I mean, we have to get past ADP. We have to get past the ISM data today. Those are going to be very important because if those two pieces of data are weak, we can actually even hit new highs. But I think this following the Brexit, the AB equals CD move is there. All right, so I'm going to put in 112.50 as resistance today. 112.50, and I think that's going to be key. And frankly, if we get up to 112.50, I might even short it up there if we can get it. All right, we are still bearish as long as we are below this yellow trend line. Just I know I've said it about 1,000 times, but I'll say it again. As long as we're below this yellow trend line, it's bearish. Okay. All right. Now let's go over to the. Oh no, we got support. Obviously, support is 111. We almost have to assume we're going to break through that because we're so close. If we do, okay, if we do break this support, next support comes in at 111.50. All right, right there. This will be the next support right through here. So I'm going to write down that as well. 111.50. Like I said, I feel like I should be short the euro dollar right now. I'm just not short the euro dollar right now. I feel like I should be. Okay. Let's take a look at the cable. All right, here's the pound. Now, oops, that's not the pound. Here's the pound. So the pound is, and if you were on the Lunch Money webinar yesterday, we are probably forming a bigger triangle here. Here, let's remove this really quick. Okay. If this is the the Brexit move, we're following post-Brexit triangle pattern is what it looks like to me. And let's remove that for a moment. I'll remove that. So there's the potential to get up to 133.80, and that's why I shorted it this morning. I mean, I shorted it at 133.58. Like I said, I'm only up like 6 pips right now, but we're in a consolidative pattern, following the Brexit move. We once thought it was an inverted head and shoulder pattern that's elongated itself, and right now it looks like to me that we can even make it up to 134 possibly, all the way up here. Okay, it's possible. You can see we'll take this last move all the way down below. Okay. The 786 comes in at 133.91. I'm going to write down resistance as being 134. But my 2 cents is as long as we're below 134, I'll be short. Okay. It is still bearish. I know it doesn't feel that way, and I know if you guys are short the cable, or you've been shorting, you're like, man, it's been strong. It has been strong. It's been strong this week. It's been really strong, but you have to take a step back, really, and kind of look at the pound overall, right? And like I said before, as long as we stay below this 135, actually I probably have to say 135. 130 or whatever, it's bearish. As long as we stay below here. Now, that's not saying that we can't break higher. We can. It's possible. It's possible we break higher. But while we're below there, it's hard for me to wrap my head around that it's bullish. Okay. All right. Support. It's going to be the overnight low. $132.86. So I'll write down 132.85. That's support. Okay. Okay. Let's take a look at the Swissy. So the Swissy, I'm a little irritated in because yesterday somebody made a good point yesterday, really good point. Said, "Hey Blake, the Swissy didn't weaken yesterday. We were trading right here. We were trading right here, and you know, we were sitting right here, and somebody said, Blake, the dollar Swiss had not sold off, and I'm like, you know what? It hasn't, and I did not." I was waiting for a move to 96. I was hoping for a move to 96 to get long. I mean, we're pretty damn buoyant here in the dollar Swiss. I have to admit, 97 is resistance. I still think 96 is support. If we can get down there to 96.10, 96.12 is the 786 retracement. 127% extension of that last move is 96.04. So I'm going to write down 96.10 and resistance is 97. And I'm hoping I didn't end up missing this one again, which is entirely possible. You guys know I think the best trade out there, the trade I feel one of the most comfortable with, not the most, but one of the most comfortable with, is being long the dollar Swiss. Why? Because I don't mind selling Swiss francs. I just selling Swiss francs is like you know, like almost natural in the market, because when you know, longer term institutions just don't want to hold that, you know, that negative deposit rate for Swiss francs. No one wants to hold a Swiss franc for an extended period of time because it costs too much. Swiss National Bank makes it nearly impossible to be in that position for too long. So I really think that being long the dollar Swiss longer term is the trade to be in. I just don't. I'm just trying to find the right places to buy it. I really want to be long down here at 96. Not sure if we'll have that opportunity, but I'm hoping. Remember, it's okay to hope when you're trading. Just you don't want to hope when you don't want to hope when you're in a trade. When you want to be in a trade, it's okay to hope. All right, so here's the yen. Now the dollar yen stopped on what I would consider some very key support. Okay, we stopped ahead of 100, and 100 is going to be a big deal. I mean, 100 is a big deal any which way you slice it. Just a lot of mess over here. Oh, that's what it was. So let's go over to the hourly. So we had this pennant from yesterday that, even though we didn't quite make it down to 150, I mean, we made it down to 165. That's pretty damn close. I would say that you'd have to say that that was pretty close to completion. You know, when you have a flag or a pennant like in that case, you know, it doesn't surprise me if we don't make it all the way, just because, you know, there's going to be a lot of people trying to take profits ahead of that. But I think that, you know, 100 is a big deal. And I'm going to take this trend line over here. So this 100 level, I mean, you know, another thing that we could be doing, which is entirely possible here, however you want to draw this, this could be just very similar to this move, right? It could be similar. The thing is if we break 100, it's going to be ugly, and I have to write down. I have to write it down. The stock market is weak enough for us to get there. All right, it's 99.90. Should be over here. I think the stock market's weak enough to get there. Somebody asked me yesterday, "Hey Blake, can we just buy buy the dollar yen at 100, in anticipation of a strong non-farm payroll on Friday?" And I'm like, maybe, but I'm more interested in buying the dollar yen right here at the 127% extension down at 98 yen. If I'm going to take a pop shot at it, which I'm not even comfortable doing in the least a bit, if I'm gonna buy the dollar yen, it's going to be down here. I can't do it. Even I know it's a round number, and I know there's a lot of support, but I just can't really get my head around doing that at this point. Okay, I'd rather buy it down here if I'm going to take a shot at it, because I can really minimize my risk by putting in a fairly tight stop. Here, you can't really put in too tight of a stop. I mean, you can always buy it at 100 and put in a stop at like 99.75, I guess, but I can't really argue that support's going to hold other than it's 100 yen. The move down here, that looks that looks a little bit better. But anyway, 100 is going to be big for today. Resistance. $102 will have to be broken to take this downside pressure off. 102 looks actually like the best area to be on the short side if you want to be short the dollar yen. Yeah, I mean, because equities could get a bounce early on today. This is still a bearish trend. Okay, Canadian. Let's do the Canadian really quick. Now, this was pretty amazing yesterday. We had a bounce off of this 130 level. Huge bounce from there. Probably right back to resistance. Enough just to squeeze the hell out of the entire market, right? So the good news is, and I on the Lunch Money webinar, there was a lot of you guys, and I'm really proud of you all. A lot of you guys that bought the dollar Canadian down here. I bought it at 130.17 personally. I sold it at 130.50, like 54 or something, 55. So I only made like almost 35, 38 pips or something like that. I only got out here. I know some of you guys were riding it out yesterday, and I want to just say how happy I am for those of you that played it off that support yesterday. really, really good job. Okay, so 130 is major support, obviously, but 130, 150 is proving to be major resistance. We're in a range. All right, let's take a look at the Kiwi. Here's the Kiwi. So we hit new highs. Relative strength was divergent as all get out. It hit new highs. Relative strength did not hit new highs, and we reversed really hard. Okay. So this is obviously key support today. 71.60. I know we're getting there. We're almost there, but 0.7160, that is really key support. Any rally to 72.50 is going to be looked as I'm hoping that the Kiwi can get back to 72.50. I really am. I'd love to short the Kiwi up there. Would love to. I have a feeling we're not going to get that opportunity, but I would really love to short it back up here. We might get an opportunity to sell it back at 72, but you know, this will probably end up stopping us on a rally. But again, if we can make it up here, I'd rather short up there. All right, there's your bias chart. It is getting completed. We have ADP non-farm in about 20 minutes, so I'm going to put you on hold. When I come back, we'll do the Aussie dollar index. We'll try to cram the rest of those in before we have ADP. So don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. So let's finish up with the rest of these. So here's the Aussie. The Aussie, you know, it's holding up relatively well, especially given the risk off environment we've seen. But I think a lot of that is you got the Aussie New Zealand cross rate effect, but also you know, the markets, even though they've come off their highs a little bit, it really, I mean, it's not like the markets have gone completely bearish. I mean, I look at what I've seen with equities, they look bearish, but that doesn't mean that, you know, I've seen plenty of, you know, times where the stock market looked bearish and then it just rallied into new highs. It just turns right around. So, you know, the Aussie is still stuck in this, you know, very, very, you know, very volatile apex of the triangle. Now, resistance for the Aussie. Now we got stopped up at, I think, an 88% retracement. Let me just make sure here. I'm going to double check. Close to. So 76.46, or I'm going to write down 76.50. You know, is going to offer us resistance today. 76.50. Support will be down here at 75.50, and I don't think there's a whole lot to do with the Aussie right now, Aussie dollar per se. Okay, let's go over to the dollar index. All right, here's the dollar index. The dollar index, so if you take a look at this entire move, right, from low to high, we're below the 50% retracement. You can see that we broke through that support. We came back and we rallied to resistance. So this, and we already rejected it. You can see that this is now a big deal. You know, just getting back above there is a big deal. So that will be 95.35. 95.35. And if the dollar can get back above there, I think that's the cue for me. If we can do this, that's the cue for me to be short the euro, because I really want, like I said, I really want to be short the euro dollar. I'm not short yet, but a move back above here would trigger that support. Now we can do this. Actually, I'll just grab another line. See these spike lows down here? That comes in at 95. Good news is we kind of know what our boundaries are here on the dollar as far as like breakout. Because whoops, if the dollar breaks through here, then we have the potential of a much deeper pullback in the dollar. So we kind of know where our boundaries are. That's good. It's always good. Okay, let's go over to the peso. I'm trying to do this really quickly before we have our ADP data. Okay, peso. How big is that 618? Huge, right? Huge. Like my hands. $18.98. I still can't get over that we have a presidential candidate that references his anatomy. I mean, obviously he's talking about his hands, but more obviously he's talking about his anatomy. I still can't get over that. It's just like, what? Anyway, 18. Hey, you really that self-conscious? Really? 1879. All right, I'm done. 70. All right. Here's the Norwegian krona. Let's do that really quick. Huge. All right. So the Norwegian krona, 127% extension. Boom. All right, that's held. That's key. Resistance is key. Support is key. Resistance key. 839 to 850. Right? 839 to 850. 8.39. 8.5000. Okay. Range. Let's go to the Swedish krona. And here we are. Kelly said, "How about a naked first lady?" Ha ha ha. Now we're talking. I'll tell you, she would be by far the hottest first lady ever. Okay, enough about that. So the Swedish krona, I did buy this yesterday. Just I don't know if I told you. I mean, I told you guys during the Lunch Money webinar. I mentioned it. I bought this thing at 8.53, and I got stopped out at 8.50, like one right here, like 8.51.80. I tried buying that channel support. I really tried to buy that, and just it obviously didn't work out. I got stopped out really quick. So Matt in our chat room, he asked, "What's up with the Swedish krona? Why is it so strong today?" And I didn't see any data. I mean, I was looking through here for I see the German data. There's EU data. I didn't see any Swedish data this morning at all. I mean, we even had stuff out of Finland, and there was nothing with the Swedish crown. But anyway, I didn't see it. Maybe there was, but regardless, the Swedish krona has come under pressure. I really still want to buy this thing because I still look at this very bullish flag, and I'm just like, okay, where can I buy it? I tried buying it yesterday, it didn't work out. I don't see any reason to buy it right now, though. So 844 is support. I mean, that's got to be, I would think that's support. I don't know if it's great support, but, probably get a bounce from there. I think any rally back to 860, this is not great support or resistance either, so just, man, I'm just marking up some areas. 860, 844, 844, 8.600, and we're in a range. Okay. Okay. We're 5 minutes away from ADP, and hey, I'm up 13 pips in the past.